Hey everyone, Couch Investor back to another video for today. So let's talk about Google, or should I say Alphabet. The stock is down around 35% since its all-time highs, also close to 35% year to date. Now, stock has come down, which means valuation has come down, but what is actually happening with the business? We've talked about Google in the past in a couple of videos. The business itself obviously is still growing, but there are some, I won't say red flags, but there are some concerning numbers. We're going to go over those numbers in this video. I'm going to show you a couple of graphs and, well, the state of the company as of today. Now, if you like this type of videos, hit the thumbs up, subscribe if you haven't, and if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Make sure to check out all the other links in the pinned comment. So, the state of Alphabet looks like this. So revenue is not really the issue here, right? Revenue has been growing year over year. Now, of course, quarter over quarter hasn't grown that much. But when it comes to free cash flow, well, it's a free cash flow machine. In the last 12 months, $65 billion. Return on equity close to 30%. So no real problems there. As I said, drawdown from its all-time highs, 35%. Gross profit margin, 56.74%. No issues there as well. And right now, from a PE standpoint for the next 12 months, so we're looking at a forward PE here, just over 18 times, which is much, much lower than where it was, well, a couple of months, even years ago. So some might say Google Alphabet is cheap today. Now, from a graph standpoint, obviously right now, you can fairly say we sit in, let's say, no man's land, right? There's no real big support here at around $96. We're not oversold. And if you look at the MACD, well, there's really no signs of it becoming a bit more positive soon. Now, of course, if we zoom in, you can see, oh, but there is this big green candle here back in February 2021 that might maybe help, let's say, technical analysis experts. But I'm no expert here, so right now, just looking at the basic indicators, not such a great graph. If you look at the 200, the 20 and the 50-day moving averages, it's below that. And as you can see, it has been rejected twice already in the last 2 weeks. This is the weekly chart, not the daily. Now, of course, this might change pretty fast in the coming weeks. Earnings season right around the corner. Maybe we'll get some more information on whether or not Chairman Jerome Powell will probably hike the rates by another 75 basis points, or maybe less. Obviously, less would mean that growth stocks will probably rally, but that's just an uncertainty right now. Now, when it comes to Google's earnings in Q2, this is what it looked like. So Google Search and other obviously increased year over year. Now with Search, so more than 90% of global searches are conducted through Google. The rest is Safari, and then some people are using Microsoft browser as well. And then there's all the other ones out there, Brave, Tor, you name it. Then YouTube ads still growing, maybe not as fast as most people were expecting. And probably in the coming quarter, we might see that number slow down a little bit because of, well, the macroeconomic environment. Then you have Google Network that has grown quite nicely year over year. So overall, Google advertising went from just over $50 billion to just over $56 billion year over year. Now, when we talk about Google, Android is obviously a big part of it. So the operating system is behind more than 70% of smartphones in the world, compared to Apple iOS at around 27%. This is very, very important because according to a, let's say, not so objective source, Wikipedia, most Android devices ship with additional proprietary software pre-installed, most notably Google Mobile Services. So Google Services total, you can see right here. So this includes core apps such as Google Chrome, the digital distribution platform Google Play, and associated Google Play Services development platform. This obviously gives Google a massive competitive advantage in gathering information about users that is extremely valuable to advertisers. And of course, you can say the same thing about Apple. I mean, the whole thing about privacy and all the data changes, IDFA, is not really to protect one's data. I mean, there might be something to it, but the bigger story here is to, well, crush the competition and increase your own advertising dollars, which is exactly what has happened. Now continue here, so we have a Google Cloud. Google Cloud is obviously third down the rankings after AWS and Microsoft Azure. So that includes Google's infrastructure and platform services, collaboration tools, and other services for enterprise customers. So how do they generate revenues from that? So from fees received for Google Cloud Platform services, Google Workspace collaboration tools, and other enterprise services. Then you have the other bets, which barely moved year over year. Now, of course, we already talked about the number of employees that has increased tremendously year over year. Now, let's look at, well, the operating income, because you can see clearly that year over year hasn't really changed that much. Now, other bets are bets that are losing money, such as Waymo, Nest. Now, a lot of people are talking about, well, Meta burning money on, well, let's say the metaverse or the Oculus Quest, etc. But at least the Oculus Quest has sold millions and millions of units and is actually generating some revenue for the company. Whereas, well, Google's bets throughout the years, we all know Google's graveyard, well, it just keeps increasing and increasing. And if you've seen some review videos about the new Pixel watch, well, it's expensive for a watch that does, well, not what it should do for that price tag. And of course, Google Cloud is still losing money, and it's losing more money this year than last year, which is still an issue when you talk about Microsoft, when you talk about Amazon. Well, we both know that the cloud segments in that business is why people are interested, especially when you talk about AWS, because the retail business for Amazon is a money-burning one. So seeing that Google Cloud is still not profitable yet is obviously something to, well, keep in mind. But overall, I know I sound negative, but overall total income from operations is still $19.4 billion, hence why it's a free cash flow machine. But there are still some, I wouldn't call it red flags, but again, Google Cloud not being profitable, other bets just increasingly not profitable, Google services not really increasing that much year over year. Yes, it is generating more revenue each and every year. Yes, it is free cash flow positive. Yes, they can use that cash to increase buybacks, etc. But maybe that's also one of the reasons why the stock has been hit that hard. So to conclude, at a 52-week low, is Google Alphabet a buy right now? Well, it's certainly a better buy today than it was a couple of months ago. And even though I was pretty negative in this video, of course, Google Alphabet is, well, one of the biggest companies on the planet, has a huge moat over the long term. Will it continue to grow revenues? Will it continue to have free cash flow? Yes, it will. Are there many other better stocks out there today in the market? Probably not at this size. So you might be surprised that after all of this video, I still think that Google is a great stock to own in your portfolio. Well, you actually will be foolish if you thought I would say, no, don't own Google or Alphabet. Same thing. But of course, some of you might disagree with me. You can write all of that in the comments below. If you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I see you all in the next one. Bye-bye.